US job growth barely slowed in April, but could tariff worries hit hiring? This is Macro Matters, and we're talking about the risk of a US recession. The US economy added 177,000 jobs in April. That is more than was expected, but that data is backward looking and won't yet reflect the impact of tariffs. The uncertainty around trade has left businesses worried, and it was blamed for an unexpected fall in US GDP this week. Well, Odetta Kushi is Deputy Chief Economist at First American. Odetta, some relief in those jobs numbers, but does this data tell us anything much about what could come next?
Yeah, this was a very strong jobs report. All things considered, the top line numbers were good. It's giving a snapshot of the labor market and labor market demand in the run up to tariffs. But I would say it's not quite an early assessment of those tariff impacts. We do anticipate that tariffs will start to impact the logistics, manufacturing, retail sectors in the labor market, but we're not seeing that in this report. There were pretty broad-based gains in this jobs market report.
When might you expect the effect of tariffs to show up in business decisions and in the hard data?
We're starting to see some of the labor market deterioration in the initial claims data, but I would expect to see some softening in future upcoming months in those labor market reports. But so far, again, those top line numbers are strong. Once you dig a little bit deeper, though, you do start to see some cracks. For example, the permanent job losers are up to a cycle high. And when we look at other labor market indicators as well, you start to see that hiring in today's economy is at about 2013, 2014 levels, which is when the unemployment rate was 7%. So for those out there looking for work, it's pretty difficult. For those that have jobs, we're not necessarily seeing a pickup in layoffs, but there is some of this concern in that labor market data.
In softer data, Odetta, we've seen some very weak surveys of consumer and business sentiment. Is there a chance the Fed looks at this softer data next week and sees a case to cut rates?
Now, Chairman Powell continues to tell us that they do look at the soft data, but they're really making decisions based on that hard data. So we know that consumer sentiment and expectations around unemployment have drifted significantly higher. Expectations around inflation have drifted higher. And certainly there's concern that this consumer sentiment will harden into sediment, if you will. But really, Jerome Powell is looking at that hard data. And so far, that's been showing some resiliency.
If rates remain high, though, but consumers are nervous to make big purchases, isn't this a nightmare scenario for the housing market?
Certainly, this consumer sentiment can start to show up in that hard data, and I anticipate that it will to some extent. And we have some other indicators in the economy as well that show that consumers might pull back on spending, and that's the real fear in an economy where 70% of GDP is driven by consumer spending. Consumer hesitancy to spend can certainly start to impact that hard data in the months to come.
With inflation coming in higher, along with this slowing growth, is the Fed going to have to pick which side of its mandate it wants to focus on?
That's the Fed's challenge at this point, and I do think that they'll start to focus a little bit more on the labor market side of their mandate. So far, all the data points to a continued wait and see approach in the next meeting, and potentially even in their June meeting, until that hard data, until the labor market really starts to show some signs of distress. I think that we can expect a wait and see Fed approach.
Do you think then that they won't move in June, or is it too soon to say?
It's probably too soon to say. We have another labor market report that could give us some insight, but certainly today's jobs report data that showed some strength in the labor market, I think further supports a pause in that June meeting. But I do anticipate that we will see rate cuts by the end of the year.
That was Odetta Kushi of First American. Don't forget, you can watch more videos on Reuters.com.